All right, welcome to Riot's Block Time podcast. We're here today with renowned Bitcoin expert Jimmy Song. Jimmy, welcome to the show.
Well, thanks for having me. I love this studio. I gotta say, I did not expect it to be this professional, but I'm quite impressed with probably the best setup that I've recorded in like ever. Yeah, so congrats.
Wow. Yeah, thank you. We've got an excellent team here at Riot, and so shout out to Gabe, Alexis, Ty, Evelyn. Great work on the podcast. So I wanted to have you stop by, one, because, you're local to Austin, but also because we haven't talked in a very long time. You've been away. So tell me where you've been, Jimmy.
So I took my kids out of school and we traveled as a family for 277 days. We left almost a year ago and we came back in June. So 277 days, 34 countries, every continent except Antarctica. We saw lots of different things, went to a lot of Bitcoin meetups, hung out with a lot of different people, and it was, dare I say it, a trip of a lifetime, and I call it my Bitcoin sabbatical, and I hope, Pierre, you get to do that at some point in your life, too.
I have a hard time leaving my house for like 5 days. I'm like, okay, I'm ready to go home now. 277 days sounds daunting, especially, you're not just going to one place. You're going from place to place. So I admire the tremendous energy level there. What was that like? What did you hear about?
Well, I've been wanting to do this for a long time because, I backpacked across Europe when I was 25. This was like way too long ago. I'm not going to reveal my age or anything. I backpacked Australia for a few weeks right before I met my wife. So I've been wanting to go again since those times, and this was sort of the first opportunity. And it was an amazing trip, and we've been wanting to do something like this. My youngest child is no longer in diapers or car seats, so it was pretty nice to be able to do that. And you say that it takes a lot of energy, and it does, kind of like the Riot mining stuff. But it's its own sort of like got its own momentum. When you're in different places and want to go see different things, and there's always sort of like an energy about visiting a new place that I think awakens inside you. You want to go see what's here, and at least for me, I get very curious, and one of the first things I do is just like sort of walk around wherever it is that I'm staying and check out the different places, and see where I can go get water or something. And that's important.
Yeah, and when a lot of people travel, I think that sometimes the focus is culinary, right? They're like, oh, I love to go to the best restaurants in the area. Would you say your focus is Bitcoin meetups?
Well, that is a major focus, but hey, we do focus on the culinary as well. I am something of a meat connoisseur, so every place I went, I tried to go find like really good buffets where I could eat lots of meats. And of course, there's different types of steak in each place. So Italy, there was Florentine steak. Argentina, there was a lot of really good Argentinian grass-fed meat. Brazil.
Is this a ranking, or is this as it comes to mind?
It's just as it comes to mind and stuff. Egypt, there was like Kafka, and Lebanon, I had some sheep brain there. Peru, I had some smoked guinea pig. That was very interesting. I had some camel burgers. It was great. There was a lot of culinary, interesting things as well. But yeah, the main thing was in going and hanging out with a lot of different Bitcoiners from all over the world. And I gotta say, there's something in common about all of them, but they're of course very local to their context, and they taught me a lot about how things actually are, and a lot of it honestly is in this book. And I thanked as many of them as I could in the back in the acknowledgement. So yeah, it was a lot of fun.
That's great. And was there overlap as well between the two of some Bitcoin meetups that are with dinner?
Yes, absolutely, absolutely. So a lot of them, they kind of know my reputation, I guess, online as a meat eater. So they'd be like, "Hey, we should go out to eat. We'll show you around." And always appreciated that. They're also great for like exchanging for local currency if you don't want to get overcharged on the ATM fees, which are exorbitant almost everywhere in the world. But you go to a Bitcoin meetup. Hey, I got some Bitcoin. Who wants to give me, sell me some of the local fiat currency? And a lot of them were very kind enough to do that, and told me about the different restaurants I should visit, and hey, you should go here, there. It really is kind of like a network, and it's nice to have local nodes that know all the stuff. Yeah.
Yeah, your point about kind of the role of Bitcoin in those interactions, it brings me back to this thought of like Bitcoin as the native money of the internet, and that people are like, oh, Bitcoin's not really money because I can't spend it at my local supermarket, and it's like, yeah, but you could convert it into the local currency and spend that at the local supermarket, and so this currency, these Bitcoin can be an asset that travels with you, and it's always in cyberspace, but in meat space, there's plenty of people who will, whether as a business or as a friendly favor, convert into the local currency.
Well, and it's not that they're doing you a favor. Oftentimes, you're doing them a favor because you go to these countries. A lot of them have tremendous inflation rates. So you go to Argentina or Lebanon or Turkey or Egypt, and all of those places are at various stages of hyperinflation. And they're grateful. They want to go take your Bitcoin for their worthless local currency that's devaluing at some significant percentage a month. And that it's like a win-win, right? Like it's like any trade in the market. You're both benefiting. It's not like they're doing this out of charity. They're doing it because they want to store value too. And the local currencies oftentimes are very unstable or devalues very quickly. So they all know. We're privileged here in the United States to not have gone through a major devaluation, but almost everywhere else there's at least been one major devaluation in most people's lifetimes, and they know the value of hard currency.
Yeah, I'd argue. I mean, maybe we saw a devaluation post COVID that was like pretty significant and but seemingly transitory. That's fascinating. And when you went to these different kind of countries, but also just cultures, do they see Bitcoin differently, or is there kind of just a universalist kind of human approach to it?
Yeah, I would say they see it differently because at least here in the West, in U.S., Europe, maybe East Asia, there's a tendency to think of Bitcoin as sort of like this investment vehicle. They're looking to outrun inflation maybe a little bit, but mostly it's something like equities or bonds or something like that, where you're trying to save money. For a lot of people around the world, this is like their lifeline. This is the way that they can get out from under the oppression of the local money. And to be fair, the U.S. dollar serves that role for the most part. But as the U.S. dollar devalues, there's a lot more people interested in Bitcoin purely for its sound money properties.
And was this going on Lightning or on chain?
Well, it depends. If I'm exchanging out like $1,000 worth of currency, and I would kind of need to do that because I have a big family and everything, then that's not gonna go over Lightning. But oftentimes, if it's like small amounts, like $100 or something like that, yeah, that can totally be done over Lightning. But for the local people, like the ability to change to the dollar is extremely important, and that's something that was made like very visceral to me when I was in Argentina, and we were hanging out in Buenos Aires, and we're going to sort of like the tourist places, and one of the saddest scenes for me was going down one of these tourist streets and seeing people just with wads of Argentinian pesos. And these were obviously poor people. They had a wad of Argentinian pesos, and they were going, cambio, cambio. And that means I change, I change. And it's they wanted to change for the dollar. And the thing is, we did some stuff, came back, same people, right? Like they're still with the wad of bills. They're waiting for some kind tourists to exchange it for dollars because of the strict capital controls there. And think about that. Like you're sitting at a tourist area for 4 hours doing nothing but trying to change to something so that you can save money rather than have it be taken away from you. Just told me that, these people need Bitcoin more than anybody because their wealth is being confiscated on a constant basis. And, obviously a week or two ago, we had this very libertarian candidate in Argentina win. And it made all the sense to me because they've been stolen from so much. And, it's not just inflation either. It's tariffs and stuff like that. MacBook in Argentina costs like $3,000. And these are poor people, so it's unconscionable what the government is doing to like capture so much of the value. What I would call rent seeking in the book, and it's really kind of tragic that a lot of these people don't have Bitcoin yet.
Yeah, now Argentina, in the past has been a very prosperous country, and it's ebbed and flowed, just depending on who's elected. But it was fascinating to hear a political candidate say, "Hey, look, our local currency is terrible. The dollar is less bad, but it's still horrible. So let's move to that."
Yeah, and it makes sense because the people know what debasement is, and you could tell because it used to be prosperous, like you said, and you can just see it in the buildings. Like the architecture is gorgeous. It's very sort of like maybe late 19th century, maybe early 20th century, just like very solid classical buildings, no glass monstrosities like we tend to see here in modern cities and so on. But like absolutely gorgeous. Lots of infrastructure. A lot of people compare Buenos Aires to Paris, except cleaner, something like that. And it's a beautiful place. But you could tell that they've been, their currency's been debased because they're used to changing the prices all the time, and the menu prices in any store are constantly changing. There was one place that we went to where, obviously not that many people went in, and you could tell like the prices hadn't been updated because they were so cheap. And things like that happen in hyperinflating countries where prices don't keep up. It's just a lot of extra work for everybody.
Yeah, that sounds awful. But I mean, even here in the U.S., we have people singing about how bad inflation is, right? So clearly, I think that there's been a bit of an uptick here of the same dynamics.
Yeah, and obviously you mentioned COVID and all of the sort of monetary shenanigans that went around that. And this is something that a lot of people are waking up to is consumer prices have risen tremendously. Your savings are getting debased. So really you're being stolen from. And that's really something that not a lot of people really can put words to. So you get sort of songs like that, Rich Men North of Richmond or something. Yeah. But he doesn't quite get it, right? Because he doesn't know the root cause of all this. And really, the money is broken. When you have a money printer that's able to print money for whatever reason they want, it changes the dynamics of everything. And that's kind of what I cover at all different levels in the book.
Yeah, in kind of the world of economics, they refer to this as the Cantillon effect and seigniorage. Do you want to explain what those words are, right? Because I think that for the layperson, they hear this and they're like, "What does that mean?"
Yeah. So the Cantillon effect, I guess. I can never pronounce his name properly because he's like Irish French. So is it Cantillon or Cantillon?
Cantillon.
Yeah. You're the French dude. So Cantillon. So this was an Irish French economist in the early 18th century. maybe 30 years after the Bank of England that started noticing what was going on with the money because the Bank of England was the first modern central bank that sort of operated with the fiat system, sort of the way that most central banks do now. He noticed that the first spenders of the money got all of the benefits. He also like came up with some very interesting conclusions from that, including the fact that a lot of manufacturing had moved out of England because labor was cheaper elsewhere. And you can obviously see that in the United States. I remember when I was growing up, there were a lot of manufacturing jobs and things like middle class, strong middle class. Essentially, all of those jobs have essentially left the United States, gone to Mexico, China, many other places. But this is one of the things that he predicted, and the Cantillon effect is really about the first spenders of the money getting all of the benefits of that money. And this is obvious when you think about government and them getting to spend money, sort of deficit spend, right? Every government around the world is essentially running a major budget deficit. They don't collect it in taxes, so where does that money come from? That money comes through money printing, essentially a loan by the Fed, and they loan it out of nothing. But it's this sort of like indirect way of printing money is the preferred method. But that money is for the benefit of the government, and even the people in the United States, for the most part, still get some value out of it. It's the people all the way at the end of the chain, the people that are in developing countries, the people that are using dollars as their store of value because their local currency is hyperinflating so quickly, that end up losing. And these are what I would call Cantillon losers, the Cantillon winners, the people that benefit from seigniorage, the people that benefit from the newly printed money, essentially. Those are all people that tend to grow enormously rich, and they have a tendency to pour money into hard assets like land or equities or bonds or something, or a lot of different things. And whatever they put money into tends to go up in price very quickly, rapidly outpacing inflation. Although that's starting to change a little bit as rates heighten, and a lot of the inflation is now flowing towards consumer level goods, which is why they're raising rates. There's this very strange effect happening that hasn't been the case for the last 20 years.
Right, because in a rising rate environment, essentially, if anything, we're going to see money get destroyed rather than created, and then the losers will really be those who have to pay the cost for that deflation. But as we saw with SVB, there was not a haircut on the depositors, right? Instead, it was, we're going to print lots of money and paper over these losses from the interest rates going up. Again, speaking to the central premise of this book here, of you've got some in society stealing from lots of other people, and because it's only, let's say, 2 to 10% that they're silently stealing through devaluation, through dilution, that they're not, it's less apparent to people, and then people are scratching their heads of why is inequality increasing, and they're not really connecting the dots of here's where the money is being stolen.
Yeah, and it shows up sort of in populist anger, I think, because they're noticing, okay, what happened to all the middle class jobs, right? Like, my dad worked at an auto factory. Like now those jobs are gone, and instead there's they're making parts in China or something like that. So there is some of the sort of secondary effects that Cantillon identified that people are waking up to and saying, okay, what is going on? How come all of these the prices of everything are going up? Can't afford a home, and both parents have to work, and I'm getting less money. I don't have any money for savings, and healthcare costs are going up. Education costs are going up. They're noticing all of this stuff, but they haven't put two and two together. They don't realize that a lot of the fault of this is just the ability to print money. The reason why you can't save as an individual is because there are no good savings vehicles. They make it very difficult for poor people to save. Rich people, they have lots of different options, right? You buy a house in the Hamptons, it'll beat whatever rate of monetary expansion, which tends to be about 7%, any day of the week because Hamptons are very desirable, or Michael Jordan rookie cards, or I don't know, Facebook stock or something like that that they got in pre-IPO, or lots of other things can beat the rate of monetary expansion as a rich person. But as a poor person, really don't have good savings vehicles. They purposefully make it very difficult. So you end up losing out whenever inflation happens. The rich tend to be protected because of land and housing and all the other stuff that you would want to own. And because it's sort of like a self-perpetuating cycle, those assets and equities tend to go up very quickly relative to the rate of monetary expansion. But the poor people lose out, and they don't get it. And unfortunately, the media doesn't make it easy for you to understand that. And I'm sure you were paying attention to Safedean's 12 days of inflation or something, like what they blame it on. It's like Beyonce or something, and hey, inflation is because of this, and they will point to anything and everything except the fact that they printed a lot of money, which is the real cause. And it's all a way to distract you from reality. It's bread and circuses, if you will. It's the injustices sort of papered over and ignored by the propaganda arm of this regime, basically.
Yeah, and then they start trying to pit us against each other, like, oh, this guy's being greedy. Oh, these workers are asking for a raise, and Beyonce. They're almost creating like strife and class warfare within society in order to point away from kind of what's going on here with the Cantillon effect. And even in the educational system, if you go take a course on monetary economics, they'll talk a lot about, oh, should you raise interest rates to, increase unemployment or vice versa, right? But they don't talk about the redistributive effects of these policies.
Yeah, they don't, and it's kind of criminal, honestly. But it's in their interest to not let you know, because the Keynesian paradigm is just so beneficial to those who are in power. You can always justify money printing for any sort of reason, which is really theft from everybody, right? And your buddies that are beneficiaries of the Cantillon effect will use the Cantillon effect to sort of mitigate the effects of inflation and so on. And they'll say stuff like, "Let's go tax the rich people" or something like that, as if that would solve this epidemic of money printing. Of course it doesn't, and a lot of that wealth comes from the money printing itself anyway. But yeah, the purpose is to distract us and to pull the wool over our eyes as to what's actually happening. What I find really encouraging, though, is that there are a lot of people that are asking really good questions. And the typical man on the street is actually thinking a lot more about these issues. I remember I saw an interview with Vivek Ramaswamy, and he was saying, like, he went into like some inner city, right? He went to Chicago, and he had like sort of like a town hall meeting. And he said he got asked questions about the Federal Reserve. Not something I expected. And it was a predominantly black neighborhood, and they were asking him about it. And we do know, for example, that per capita, more black people own Bitcoin than white people. So I suspect that, these sort of like, deeper truths that are sort of hidden in the mainstream media are making their way to the people. And, eventually I think they're going to figure it out and figure out how to throw these bums out, essentially by pivoting to a different monetary standard.
Right, because people in the context of inclusion with Bitcoin will often point to kind of the unbanked, right? That it's people who don't have access to traditional payment rails, but arguably it's people who don't have access to the money printer.
Yeah, it's the people that don't have access to the money printer don't get free goodies, right? Like the people with access to the money printer, they get lots of free goodies. They can do stuff, and in that sense, I kind of like the higher interest rate environment because it brings us closer to reality, and you can't do really stupid market actions. Those used to be subsidized by fiat money. Those are now getting punished by the actual market because you have to, in a high rate interest rate environment, you have to sell into the market and you have to make sure that you satisfy the market. And you're seeing a lot of that, like just even culturally. A lot of Disney movies are flopping because they're sort of pushing an agenda. You've seen like what happened with Target and Bud Light and things like that. It's those actions by the consumer matter a lot more in a high interest rate environment because there's not as much money printing or even monetary contraction, and you kind of have to sort of obey reality a little bit. And I like, not to put a too fine a point on it, but this is the world of Bitcoin. Is you have to follow reality. You have to follow the markets instead of a central control and like we get to push whatever we want on you guys and you have to do what we say because we control the money. Not so much anymore. And as interest rates continue to go up, I think you get actually more rationality out of the market, punishing the sort of stupidity that occurred under a lot of fiat money printing.
And we saw these big layoffs with big tech, where they were laying off thousands of people, and folks were like, well, are these websites going to start crashing, right? But so far it seems fine. I mean, is there a lot of people, in those big companies that maybe it was being subsidized in a sense by low interest rates?
Yeah, absolutely. And I talk about it in one of the chapters in the book where. What happened, right? Like Twitter laid off like 90% of their workforce, and then the site's continuing to run fine. So what the heck were those 90% doing? Well, it turns out that there's a significant amount of rent seeking in a lot of these companies where you're either sort of like performing some other agenda than the one that satisfies the needs of the market. So you might be complying with government orders of some kind or doing something that's not actually adding value to the business, but is sort of satisfactory from a regulation perspective. And I suspect most large companies in most of the Western Hemisphere, they have a significant rent-seeking component because, in a sense, the government is using that to extract, concessions from a lot of these places and stealing from them too. And that's a way in which they get paid back in Cantillon effects through money printing, through the commercial bond market, and so on, and bailouts and all kinds of other things. But this is sort of the corrupt bargain that a lot of companies make is, okay, regulate us harder, but like give us some of the sweet Cantillon juice that comes out from all that money printing, and you can understand why they do it because. By taking government subsidies, it's a lot easier to survive than actually filling the needs of the market. The market's fickle; it's very difficult to operate in it, and we're seeing sort of like the missteps that are being taken when the subsidization is removed with something like Target or Bud Light or whatever. You piss off a lot of customers. Like the market's fickle. A lot of these sales are not coming back. It's because they were so used to fiat subsidization where they didn't have to fill the needs of the market that they just completely lost touch. And I suspect that if the high interest rate environment continues, you're going to get way more of that, where the consumers have more power. In a fair market, the consumers always have the power because it's their choice and they have to voluntarily trade with you. But because of fiat money printing, you get another voice in the market where they're able to influence things significantly. And even if you lose sales in the actual free market, you can make up a lot of that through loans and other financial games you can play through money printing.
Yeah, and I think that the classical argument for having a government with a balanced budget and not filling that gap with money printing by monetizing the debt, the idea was that, hey, if you want to spend more and vote for that, you also have to tax more and vote for that. And the kind of the pain of having to vote for a tax increase might make folks think a little more deeply about the joy of the spending side, because we all love to spend money, right? Nobody, but it's on kind of getting the money that all the friction starts to occur, and that the money printing removes that friction from the democratic process, right? It's deeply undemocratic the way that all of the money printing happens with the Federal Reserve and the banking system.
Yeah. Oh, and it's way more unfair than because in a sense, every time the Federal Reserve prints for the deficit spending of the U.S. government, or whatever layer, what you're actually doing is stealing from every dollar holder. And dollar holders are not just in the United States. Everybody in the world uses the dollar, whether for buying oil, the petrodollar, or for just savings if you're like somebody in Nigeria or something. And the naira is inflating. You're using, those are the people being stolen from. One of the things I like to point out is that during the pandemic, prices in the North Korean black market doubled. Now, not all of that is due to inflation. Obviously, there were border controls and things like that as a result of COVID. But the fact that the dollars that the North Koreans were holding, and by the way, the dollar is the most desirable black market currency in North Korea, believe it or not. And if you held the dollar there, it devalued by 50% in practical terms, right? These are the people that are getting stolen from. At least we have the right to vote, right? And try to influence Fed policy, maybe through voting in the right people or something like that. It's indirect, but we at least have some say. But the people in other countries that are using the dollar, I mean, it's completely unfair. You're stealing from them without them almost even having any knowledge of what's happening, right? It's just the price has doubled. Okay, I guess my savings has halved. I mean, they amount to the same thing, but people don't really put two and two together oftentimes.
Yeah, and I think policymakers look at the dollar being in the world reserve currency, and they point to that as just, oh, that's just good, right? And they're very proud of it, but then they don't bring with it the responsibility of that, which is that when you're setting U.S. dollar policy, well, now you're no longer only looking at U.S. inflation or only looking at U.S. unemployment. From a moral perspective, you ought to be looking globally at all the users of that currency, but they're structurally, they can't do that. And then it leads to just a far greater level of inequality than we would think of as domestic users.
Yeah, well, I would put it this way. They do feel a sense of responsibility. It's just not towards the actual people that are using it. So I point out in part 5 of the book, which is really about the dollar hegemony, the reason why the U.S. gets caught in so many conflicts around the world, right? Like, they're a third party everywhere. Any conflict happens between two countries, you see the United States at the table. Now, why is that? It's because they control the money, and they're a third party to every single conflict. And there is sort of like this underlying moral obligation that a lot of other countries sort of put on the U.S. Hey, like, you have the reserve currency. It's your obligation to fix our problem. And this is sort of the moral obligation of money printing that comes into play once you have the money printer with you. And to sort of make that a little more real, think about like in domestic politics, right? The current situation is that whenever you have two parties fighting about a particular issue, it's, well, government should do something, right, for my oppressed class or something to that effect. And their logic is kind of understandable, because if you can essentially print money for free, right, which is sort of the Keynesian law, then why aren't you helping me, right? I am suffering. And it's kind of like the Superman dilemma. If you're Superman, you should be constantly rescuing people. Well, if it doesn't cost anything, why aren't you rescuing me out of everything? Then it's, why aren't you giving me healthcare? Why aren't you giving me a house? Why aren't you giving me education? Why aren't you giving me everything that I've ever wanted, since it's free? And in a sense, that plays out at the global level too, where the U.S. has the reserve currency. They have the ability to print money. So it's, oh, we're unjustly being attacked by this foreign country. Why aren't you helping me? Right? Because obviously you print the money. Why aren't you helping me? And it's a hard logic to kind of escape from, because if you do claim that it's not actually theft, that it is like sort of money out of nothing, then of course you have a moral obligation to go do something. And unfortunately, that's why the U.S. has been sort of like involved in all sorts of altercations around the world, like that don't really make any sense, right? Why the hell were we in Vietnam? What were we doing in Iraq and Afghanistan, now in Ukraine? These are halfway across the world. Like, they're not even anywhere near a U.S. border, yet we are involved in all of these things. And they use propaganda to make it seem like an imminent threat. Of course, it's not. But this is the sort of global moral obligation of being the reserve currency that we end up with because we can print the money. And the last global reserve currency was the British pound. And, just having studied it a little bit, they were involved in conflicts all over the world too. The Boer War in like South Africa, or they had various conflicts in India and the Middle East and stuff like that. These were their colonies, but in a sense, the rest of the world is a U.S. colony because they're using our money. And if you look at it that way, all of the conflicts that we're in, it's kind of like trying to quell sort of little mini insurrections of what's going on.
Yeah, and then we start seeing kind of competition of, oh, well, you printed money to pay for bank bailouts for insiders. Therefore, you ought to also print money to rescue puppies. Right? And so it's not like, oh, you shouldn't be allowed to print money for bank insiders, right? They just kind of try to leverage those points. Or, hey, you're giving money to a foreign country, you should give this money to for a domestic disaster, right? It kind of starts getting leveraged against each other.
Yeah, they don't really question the rightness of the money printing itself. It's they sort of, I guess it's playing realpolitik or something. It's, okay, money printing exists, therefore, like we deserve some. And, let's benefit from the Cantillon effect or the seigniorage that you can get from having the ability to print money. And that mentality, I think, is just sort of like a race to the bottom, because ultimately that means the civilization ends up being more rent-seeking, and you ultimately don't build anything, and that leads to collapse. And we're kind of in the middle of that right now.
What would you say are some of the like top symptoms of collapse? Right?
Yeah. I think this might be a weird one to say, but I think declining birth rates is like sort of the canary in the gold mine for everybody. And you can tell, because this is something that humans have always done, is propagate their species. And for one of the first times in history, it's like going down almost everywhere in the world at the same time. So what is going on? I try to explain it a little bit in one of the chapters, fiat devases families. But part of it is that, first of all, there's so much rent-seeking in each society that what used to be just like a single breadwinner in a family would be enough to support the entire family. It's not the case anymore. Most families have both parents work, not because they want to. I mean, I'm sure some do, but because they need to. They can't afford everything. They have to work that much harder to even afford what they get. And obviously, if you don't have a parent staying at home, you're limited to maybe about 2 kids. It's going to be very difficult to manage more than that. And second, you have this weird thing with real estate, where that seems to be the asset of the preferred store of value for most people. So because there's a store of value premium on real estate, the people that actually want it for its utility don't get it for the price that would be more reasonable in a free market. So as a result, you get like rich billionaires that own lots of properties, right? And they don't even live in most of them because they just don't want to lose money. And not going to the the Catholic family that wants to have 11 kids, right? So you get less kids pretty much everywhere as a result of this sort of rent seeking that's extracting value and stealing from a lot of people. And the places where that theft is the most prominent tend to have the least number of children. So South Korea has the lowest birth rate right now. They also have some of the highest real estate. Most people, even in their late 30s, can't afford a home because real estate is just that expensive. So of course they're not gonna have it. Like if you don't have a home, like how are you gonna have kids? And certainly not more than like 2 kids. So this dynamic, I think, is just sort of pointing to the inability of people to save or to plan for the future because of the urgency of supporting the rent-seeking class, essentially, in the countries that they're in. And what you get is low birth rates pretty much everywhere around the world. And yeah, I mean, there are many other symptoms, obviously, but that one strikes me as a very pernicious one that might lead to the decline of the human race in many ways.
Yeah, and we've even really seen the emergence of kind of an anti-natalism ideology that is often wrapped up into kind of thinking that, oh, there's going to be ecological Armageddon. And so, but when I talk with some people and, they have this anti-natalist thought process, and I just keep, asking questions and listening to, their life experience, 9 times out of 10, it boils down to, I can't afford like that many. And so I'm like, okay, well, it seems like the ideology is downstream of the economics in many cases.
Yeah, absolutely. And it's we're not really rational creatures. We're rationalizing creatures. Right. So if the reality is that you're not going to have kids, you're going to rationalize why that's a good thing and so on. But a lot of that mentality of this, like we're destroying the environment or whatever, it comes straight from fiat money because fiat money is very zero sum. So if somebody is winning, somebody is losing. This is the reality of rent seeking. If somebody is rent seeking, you have to steal from other people, and those people lose. There's a winner, there's a loser. Most people think that way. That becomes sort of like ingrained as a base philosophy of life. But real markets, don't work like that. When you and I trade, Pierre, if I give you $20 and you give me a shoe or something like that, we're both benefiting from that trade. Wealth goes up for everybody when you have market trades. When you're centrally distributing, redistributing stuff, that's not happening. But people are so stuck in the zero-sum mindset that they think each additional person is actually taking away from everybody else. In a tradition, in sort of like a sound money mindset, you see the extra person as what it is. It's a benefit to everybody because they're going to bring goods and services to the market that are cheaper, better in some way, and that in turn benefits everybody. It's the wealth that's created through hard work and making something for the market. That's good. That ultimately makes civilization happen. Instead, there's this sort of anti-human view that fiat money sort of encourages, that fiat money exacerbates because like we kind of fear it, and status games are zero sum and so on. So we think that that's how life is, but it's not. Like when you remove politics from a lot of stuff, you realize like there's a lot of room for growth. And unfortunately, most people don't know anything other than the fiat world, right? Like we're raised in like an educational environment with, okay, if this person's top of the class, then I'm not. And, it's a very sort of like zero-sum world that people are immersed in. And they don't understand that in a free market, if you bring a good or service to the market, you're benefiting everybody. And really, everybody else is sort of like a benefit to you. And, that's how civilization and cities and all this stuff grows.
Yeah, and it goes back to like what I think what is one of the key insights of monetary economics, which is that if you have an abundance of money, then you have a scarcity of goods, and if you have a scarcity of money, then you have an abundance of goods. And that dichotomy is just so foreign to us because we're somewhere like in the middle, right? Where the Federal Reserve doesn't hyperinflate overnight, but it's still expanding.
Yeah, I mean, think about it. What's easier, printing money or making goods, right? Like it's way easier to print money. So most people want to go into these rent-seeking jobs rather than like satisfy a good or the market with goods or services. The goods and services are much harder, but those are what actually build civilization, rather than money printing, which just steals from everybody else. So in a sense, this is the promise of Bitcoin because it's a hard money, because it's sound money. Its emission schedule is set for the rest of its life, makes it much easier to it makes it much harder to rent seek, and it sort of forces everybody into this mode of creation rather than the mode of stealing and rent seeking. And that ultimately, I think, is what brings joy to everyone, right? Like, I suspect that most people that are rent seeking, they know deep inside that they're rent seeking, right? And what does your soul do if you're doing something bad? It gets you depressed. It gets you to want to numb the pain and stuff like that. We have epidemic levels of depression, very high rates of suicide, things like that. These are all symptoms of this weird fiat phenomenon of rent seeking, where you're not contributing to society at all. In fact, you're a leech, and in a sense, it's those things are in there inside of you to sort of prevent that sort of outcome. And I think that's ultimately going to stop a lot of this stuff. And instead of destroying, we're going to get back to sort of a creation economy again.
Yeah, and this is why I often refer to Bitcoin as anti-seigniorage technology.
Yeah.
Right? 'Cause it is savings technology in the positive sense, but I think that in the negative sense, Bitcoin mining specifically, the way that the units are added to the ledger is hyper-competitive, right? It's this open process so that you avoid those monopoly profits that have plagued monetary systems time immemorial. I mean, from the beginning, governments started monopolizing mints in order to capture to create that premium, that seigniorage.
Yeah, and that the beautiful thing about mining is that its costs tend to go towards the price of Bitcoin, and there's very little profit in it. Whereas if you're sort of, I guess, the equivalent of fiat mining, giving out loans, it doesn't cost anything. And you saw a lot of people in finance making tremendous amounts of money off of leverage and things like that, which are all through loans of one type or another. So, that making that process very difficult, making the process of creating the money difficult, right? Like of being able to, I guess, be part of that emission, it is a virtue in a monetary system. The fact that it is difficult means that most people won't go into it. And how many people do you know that first got into Bitcoin and they were like, "Oh, I want to be the money printer." Then they tried to get into it and they lost a lot of money trying to do it because it turns out to be an extremely competitive business. It's kind of like gold mining, right? Gold miners, very, very competitive. And if you're not one of the top companies out there trying to gold mine, you're not going to make any money. And in fact, you're going to lose money. Similar in Bitcoin mining. I don't know how many mining companies have gone bankrupt because, this will be easy. I get to be the equivalent of a Wall Street banker. No, it's not like that at all. And they go bankrupt and it's like, oh, what the heck happened? I should have just, worked and used that money to buy Bitcoin instead. That's where we want people to be. Work, provide value to the market, and store your money in this stuff instead of doing it the other way around.
Essentially, at a macro level, you have to choose between proof of work or seniorage,
Yeah,
right? There's
yeah.
not like a third thing where, oh, there's no work involved, but there's also not somebody who's rent seeking on top of it.
Yeah, and rent seeking is so attractive, right? Like, if that option's there, very few people have the moral wherewithal to resist it. And you can tell that they'll justify it with almost anything. Where I'm a civil servant, or I'm bringing, like, we're rationalizing creatures, so of course we'll justify it in whatever way we can. But I mean, like, if BlackRock disappeared tomorrow, would we be any worse off? I really don't think. I think we'd actually be better off with them not having such power in the market. It really is kind of a zero-sum game where if one entity is sort of printing money through loans or leverage or something like that, then somebody else is losing at the other end. Whereas, providing value, like we were saying before, it enhances civilization. People trade because they're both getting something out of it, and that ultimately builds something. And I was reflecting on this with somebody before about how companies like 100 years ago, they used to give out dividends that are like completely unthinkable now, like 10% a year, right? Like, you can't get that off of anything, right? Like, what? Like, you keep the equity and you get 10%. Like, who does that? Like, but that's how profitable those companies were. That's how much value they were adding to the economy. We don't have anything like that now, right? The amount of value that modern companies are adding is minimal compared to those companies in the past. And it's no wonder we've sort of slowed down progress on so many fronts, because these companies are all fiatized. They're subsidized essentially through money printing. So they don't need to make a profit, which means they don't need to provide value to civilization, which means that civilization isn't really progressing that much. And we have this sort of stagnation that results as a result of the fiat money printing that, honestly, under a harder money standard, we get a lot more of the growth and progress.
Yeah, I mean, I think that the biggest thing that people point to in terms of progress is ChatGPT. We almost had superconductors, but that seemed to have been a fluke. And so, when you look at the growth of Bitcoin, and especially, whether it's in the US or abroad, but I think that, like, one of the criticisms against Bitcoin is that, hey, if you think it's so great and it's going to get all of this adoption, how's it going to scale, right? It's 7 transactions per second, right? How's everyone going to get their own wallet and UTX? So, like, what's your thought process on that line of reasoning?
Yeah. So I'm always suspicious of sort of linear projection, and this is very much linear projection of a clearly nonlinear system. If we use oil at our current rate, we'll run out by this date, or if we're drinking this much water, we'll run out at this date. This is sort of like a neo-Malthusianism, right? If we have this many people, it'll linearly project out. We'll have way too many people, and given the current processes, like. Thing is, everything is changing all at once, right? Like, it's a dynamic system. There's incentives at play where if something is getting constrained, then there are opportunities for other people to make a profit in it. So they come up with new stuff. Just saying, okay, well, if we linearly project out from here, it's only 7 transactions per second. Who knows? We already have Lightning, right? This was in response to some of the fee pressure that we saw in 2017. And my belief is that the higher the fee pressure, the more incentive there is to come up with solutions. So, if we get like a fee environment that's an order of magnitude worse than, say, it was in 2017, which is so far the worst that we've ever had, I imagine there would be significant innovations that are coming in. It's what I'm saying basically is that it's not a static system. I know Keynesian economists like to control all the variables and say, ceteris, whatever, all things being the same, right?
Yeah.
that X will happen. But that's not the real world. You have people that are able to respond, and you have a market, and you have people that can make money, and incentives change, and just projecting it out that way, it doesn't work, and it never has, and those projections never come to pass. It's just sort of an estimation, and hey, this might become a problem later, but the advantage that Bitcoin has is time. Like you'll see, like as we get closer, there'll be maybe deeper utilization of Lightning, maybe deeper utilization of Liquid. Maybe we even get stuff like Arc or something else, where you get significant scalability, order of magnitude scalability upgrades, without through technology or innovations or different wallets and things like that. It's just silly to me to be like, in 2050, the block subsidy will be this, and therefore, Bitcoin's not going to exist anymore because no one will mine. It's like, okay, first of all, it's not a step function, and it happens over a period of time. And, as companies go out of business and new companies come into business, all of these dynamics change. So linear projection is just incredibly stupid, and it's an intellectually dishonest argument, in my opinion.
Yeah, that's fair. I mean, if we look at Segwit, it took 4 years between activation and kind of getting like 80% utilization of the upgrade. Taproot has only gotten started. Lightning has only gotten started as well. I mean, one could imagine that in the future, most on-chain transactions will be Lightning channels opening and closing. We're very far from that reality. I mean,
yeah, and people like to sort of like LARP on that to kind of sound smart. Oh, I'm predicting the future. But you look at almost all of these sort of like panics, and not just in Bitcoin, but like, okay, peak oil has been a thing for like 30 years, and we've never even come close, right? It's like, in 2020 or something like that, there's going to be only like, 10 million barrels of oil left, and we're all going to like have to ditch our cars or something like that. Those linear projections like never come to pass. Like humans are adaptable, and they come up with new things, and they come up with alternatives, and the market is just so diverse, and there are goods that you can repurpose and things like that. Like very little of that is taken into account when you're doing a linear projection. Here's X, here's Y. Okay, here's where the line is going, and therefore we should do something now, like way before. That's not a good argument, dude. It's just that's not how things work. People adjust, people change, and it's I hate that. It just yeah. I really don't like those.
Well, I'm sorry I got you so worked up, Jimmy. What else should people know about your book?
Oh, so it's a book that I've been working on for the past year while I was traveling. But there's a lot in there. It's mostly aimed at people that are in Bitcoin already, to just give a flavor of how bad fiat has really gotten, because I even being in Bitcoin, like some of the things I've found out, like doing research for a lot of this stuff, it's scary how bad it is. The growth of the bureaucratic state, the rent-seeking class, and all kinds of areas. We really kind of are on the decline because of fiat money. I really don't think many people truly understand how bad things are currently, just right today. And I think waking up to that, I think, will hopefully help people to understand the benefit of Bitcoin. Because, we say Bitcoin fixes this, but really it's just taking away some of the incentives of fiat money. Like naturally, things are fine. It's just that fiat money corrupts so many things that, it looks like Bitcoin is fixing it. It's really just removing fiat from the equation.
And so do you think that we're heading towards like a bifurcation where part of society is on the Bitcoin standard, and the rest of society is not on a Bitcoin standard, is still pursuing fiat maximalism?
Yeah, that's a good question. I suspect that it won't be such a clean split like the Bitcoiners and non-Bitcoiners or anything like that. I mean, it'll be a spectrum. Some people will get into Bitcoin earlier. I'm, in many ways under a Bitcoin standard already. I'm guessing you are as well to some degree. And, people, I think over time will get more on there. And, generally the trend will be towards Bitcoinization of every single person. But it'll take, a boomer that's on the verge of retirement, probably not going to get there very quickly, but somebody that's 22, like trying to pay off college loans or something like that, and like sees this as sort of like the ray of hope, maybe that's a little faster. So we'll see, but time, I think, is definitely on the side of the Bitcoiners. And once Bitcoin hits like that 20-year mark and stuff, I really think there's going to be a lot more people on it because it'll have proven itself over a long period of time.
Yeah, I mean, every time I mention to someone that Bitcoin is 14 years old, I'm like, wow, Bitcoin's 14 years old.
Teenager already.
They grew up so quickly.
Yeah, and I mean, we're gonna hit the 15th anniversary of the white paper in a couple of months. Isn't that crazy? Yeah. Like just everything just kind of, and like back when we got into the space, like 2013 or whatever, like, man, that seemed like, it was just such a different world. But, that wasn't that long ago. Yet, it actually kind of was. It was 10 years ago. So I was like, what the heck?
Yeah. All right. Well, Jimmy, it was great having you. Looking forward to reading your book. Thanks for the copy here. I'll make sure that I get your hand signature, not your PGP signature.
Oh no, there's both. It's
oh, look at that.
Yeah.
Oh,
so that's how I do it. I sign it with my hand and attest that it's my hand signature using PGP.
Wow, I like that. Wow, it's a real non-fungible token.
It's really just, it's not a token. Well, the book's the token, right? Because like, that's the thing that you're gonna pass around. But I am doing a crowdfund for Fiat Ruins Everything. If you want to support my work and have me write more books like this, then go to fiatruinseverything.com and you can buy prints of this wonderful cover. Lots of the paperback, audiobook, hardback. Even a couple of other goodies in there. But it's all available on fiatruinseverything.com.
Awesome. Well, I enjoyed the promotional video for it, so folks, go check it out. And thanks again to Jimmy for coming into the studio today. And we'll be back next week with another episode.